Welcome to the market update. My name is K Kim with the Traders Club. Today is June 22nd, 2018, Friday. As I record this video, market should be open another 3 hours, so you should be seeing some flashing lights on your left. Today we'll be looking at Spider, IWM, Qs, Apple, AMD, and Twitter, and we'll call it a day. I hope you guys had a good week trading this week. Market been seeing some gaps, gap downs, gap ups, up and down moving here. Let's kind of take a look here on the Spider. Obviously, something that we've been talking about is that we've been talking about how the bulls have been cultivating the base here. Something also we've been talking about that we were never in a downtrend, because downtrend definition says lower highs and lower lows, but we never had lower low. This is actually equal lows, so we did have lower highs there. So it was more of a consolidation type of pattern, not not so much as a bear market or a downtrend, looking at things more intermediate term to primary term. So since then, bulls have cultivated and established this minor to intermediate term uptrend, as you can see there with the higher lows and higher highs. Well, this was a lower high, but now with this cultivation to 280, now we can call that as an equal high there. So now bears don't even have a lower high anymore. Now that turned into equal high. So you can see this is an equal low, and that's equal high. So you can see that we're still pretty much in this box consolidating after a correctional phase there. And this is a very, very healthy movement, especially for the fact that the market has just gone up from, this is prior to the presidential election back in November. From November to May, that move, we corrected about 11%, and then now we're consolidating, building a base here. So this is a good sign for the primary term perspective. This is a good sign for investors. And you know, everybody always, there's always on every pullback, actually not even a pullback, even every day, even when this thing was going up, all the way through 2017 and 2016, there's always somebody somewhere calling for the crash. It doesn't matter if they're on TV. Just because they're on TV doesn't mean they know what they're talking about, right? So despite the fact that, and it is good, at least I like it. I like when I hear people calling for crash. I like when there's fear, because I buy that fear, right? I like it when there's fear in the streets, because the more fear there is, the better it is for this market to continue higher, right? When everybody is on board for bullish, that's when you want to be cautious. You know what I'm saying? But obviously, the sentiment is still very much fearful. And not only that, you know, looking at things more minor to intermediate term, the 280. Last time we hit 280, this thing tanked. And a lot of bulls are still scared in that vicinity. And we still haven't filled this gap. This gap has been open still for some time now. So the last time it was open was what? In early February. Today's, you know, almost July here. So it's been 5 months that this gap has been open. That gap must be filled for the buyers to make its move here. A lot of pressure is coming from that gap. There's a lot of fear in that gap. Last time when bulls attempted to fill that gap here, they failed. They got back up to fill it. This time they got dismantled. We're back here 3 months later after they've been failed, trying to fill that gap, failed again. But this time around, instead of just completely crashing, it's actually pulling back in a manner, more in a like a slower manner. You can see on every pullback, there has been that dip buying opportunity. So we're talking a different bulls here. These bulls are very, very emotional, very, very short term. They're just, you know what I mean? They're still fearful of this market. But bulls here, you can see that they're a little bit more calmer though. They are calmly buying these dips here, and they're holding through it. And right now we are holding prior resistance, possibly as new support. And in that vicinity, we got this rising uptrend support. Coinciding with that 20 EMA, you can see that rising 20 EMA, that 20 EMA acted as support on this day, May 29th. And then we got 20 EMA kind of holding here today. That 20 EMA has been modified to setting at low. So if you want to put that into your charting software, that 20 MA is setting at low. Same with my 50 MA currently setting at low to accommodate this lows there. So few things can happen. We can very well just jump from here, continue higher. This tiny gap still remains open. The bulls have opened these gaps here, which is a good sign. Again, gaps are a good thing. If we can keep the gap open, that will be a good thing. Remember last time when the bears opened this gap, things got difficult for the bulls for 6 months. So these two gaps that has been open only for what, like a month or so now. So the longer that gap remains open, the better it is gonna be for the buyers. Right now, looking at things more of a minor term, either we jump, continue higher from here and fill this gap here, the first gap, and then pull back here. Let me adjust that gap a little bit. It's actually like there. And then pull back, something like this, and then continue higher. Or if we do see some shenanigan next week and this thing this starts coming down or gapping down or start seeing some flushing next week, we want to see buyers protecting 272, potentially even, fill the first initial gap at this level coinciding with that 50 EMA. But for sure, buyers want to protect this gap, at least one gap. Bulls don't have that many. Bulls have no gaps here. Just looking at this screen here since last 5-6 months here. This is the only gaps that bulls have. Bulls must protect at least one of those gaps here. It will be best if we can keep this little tiny gap, keep that gap, and keep that gap. And then if we can break above 276, then we might even have a tiny, like this double bottom type of deal that goes up and fill this gap and possibly come and fill this. And this gap must be filled. That's where all the fear and terror is coming for the short-term traders. You know what I mean? That last time when the gap was open, this thing tanked. Last time when the gap didn't get completely filled, it tanked again. We're up here. So bulls been trying to fill this for some time. And that gap needs to be filled. That gap must be filled. Must kill that downside. Once that gap gets filled, probably gonna act as resistance. We may pull back before getting back up and to fill this gap as well. Once these gaps, all these downside gap gets filled, and that will be then much easier for the bulls to make new all-time high and continue grind higher. Until then, we're still probably going to be a little bit hectic here. I am not surprised. I'm not going to be surprised to see some shenanigan next week. If it continues higher, that's great. But if we see shenanigan, these are the levels that you want to watch there. Let's continue with the IWM. IWM is stretched. It is stretched. If you look at your weekly chart, if you look at your weekly oscillators, they're actually overbought. This does not mean it cannot go higher. It means that the odds are catch up here, but it could very well keep grinding higher like this. This is why when the market or stock is in a bullish manner, in a strong uptrend, you always want to give benefit of the doubt to the buyers, but keeping in mind that when certain stock or index is stretched, that then you could start to manage risk. Obviously, the Russell 2000, I've been accumulating calls in these vicinities here, in these lows, and I've been actually closing out a little bit. Now I still have quite a bit, but just a little bit in these levels because I just want to lock in a little bit of the game. And because we're stretched on the weekly, the worst case scenario for this stretch is this thing coming all the way back down to retest 160. That's a possibility. 160, 159. The worst case scenario, 157. That, let's not get too ahead of ourselves, but that will be the worst case scenario. If this thing comes anywhere near 160, 157, definitely an opportunity to buy. Not a level to freak out, but that's a level that, like, I'll be happy about. If this thing comes all the way, it's like, wow, that's a gift. You know what I mean? Like, that's a gift before making another run up there. Let's go to Qs. Qs, you know, again, Qs some shenanigan up and downs here. You can see that actually if I actually turn back the 20 MA back to normal setting, you can see that 20 MA is hitting here and hitting there. But because my 20 MA is now setting it low to accommodate spider movement, it's a little bit off here, but we are trying to find some support, prior resistance as new support. And obviously this thing had a great run from the April lows, so I'm not surprised to see some up and down move in here. I won't be surprised to see this thing coming back down and coming back in and to retest some of those levels. It may or may not, but if it does, some of these levels are a great level to start accumulating some more in that vicinity. But obviously we're on an uptrend. We have a completely nullified this head and shoulder formation. We talked about it last week, I think, how flop that was. I mean, bears been flopping for years now. They've been building these head and shoulder formations, not able to you know, materialize from it. You know, the problem with the head and shoulder formation, especially when it comes to indices, when you see all the indices like Diamond, Spider, you know, Russell, and the Nasdaq, they all seem to have some kind of a like topping pattern, like either triple top, head and shoulder. That's when you want to be fearful. But when you see like Spider not doing that, but Qs is the only one, Russell 2000 rising, that's when you know that this is a flop. This is a flop, because what's going to happen is other indices are going to stay afloat, while there's something like Nasdaq can come out of this head and shoulder formation you see. So this is a reason why, like, if you go back and study like maybe 2008 crash, you can see all the indices were forming they were not exactly same looking, but they were all forming topping pattern exactly at the same time. Right now, no. See, and so funny that everybody think that all the indices should be all looking the same. They won't, and this is a good thing. It's a good thing in the market when you see Russell leading, when you see Diamond lagging, when you see Nasdaq trying to form some kind of crash or topping pattern but failing, right? When you see Spider still in the middle ground, it is actually a good thing. There's a money rotation occurring, so that when there's a weak index like maybe Nasdaq with this topping pattern or Diamond, it can kind of work together to keep these indices in line. So like something like Diamond, right? If you follow me on Twitter at 2K Kim, you know that I've been buying the dips. Whereas something like Russell 2000, I've been closing some out. I've been actually putting some of that money from Russell 2000, putting that into Diamond. I myself is rotating, because a lot of times people think that because a Diamond is weak, well, that's a troubling sign for the overall market. I've heard that for years. That's actually not a trouble sign. It is actually a healthy sign. The problem becomes when all the indices are on cue exactly, and then they all start to form exact same pattern like this. If I had a Diamond, Spider, Russell, Transport, and the Nasdaq, they all form this head and shoulder formation, I'll be scared. I actually be scared. You know what I mean? But as long as we're seeing the Russell leading in a healthy way, Spiders build that base, trying to get back up. Qs obviously now have completely nullified. These are the great signals. This is not a negative signal. And some people say, yeah, well, Diamond Dow's lagging. That's a troubling signal. No, it's not. Sometimes it will take time. When you see these indices are not acting in in a more of a ubiquitous way, that's not a bad thing. That's actually a good thing. When you see these sectors not completely in sync with each other, it's actually not a bad thing. It's a good thing, because the problem is when all the sectors are seeing weakness, that's bad. That's when you start thinking about crash. Is a crash that might be coming? When you start to see all the indices and all the sectors start to see these topping pattern, they're feeling all lagging, and you know what I mean? They're all lethargic. That's when you want to be paying attention. But when you see some sectors are doing great, some sectors are lagging, some sectors are kind of basing, these are all good signs looking at things in a primary term perspective. You see what I'm saying? Let's go to Apple here. Apple. You can see that Apple, last time we talked about this daily bearish divergence. Remember we talked about that a couple of weeks ago. Basically, you know, we had a good move here. We pulled back. Bulls really didn't have that much energy to begin with, but they pushed a little bit more, and then we formed that bearish divergence and finally gave out. So bulls got tired, and bears taking advantage here. Currently though, we are seeing prior resistance as new support. You can see that resistance acting as new support as of today, and the 50 MA is in that vicinity. 20 MA is currently down, so minor term perspective is bearish, but the 50 MA is showing us that intermediate term we're still bullish, obviously. So I'm not sure at this point. I mean, are we going to find support here? I mean, this is a picture perfect prior resistance new support. This is a pivot that everybody can see. I mean, this is a pivot that even most novice trader is going to see. Open up, you know what I mean? They looking at this, and they're maybe even trading off of this, right? They go long here and place their stop right there. So if the market knows that there's too many stops in these levels, right below this level, the market is going to come down, take those stops before going back up. So sometimes it plays out picture perfect, prior resistance, new support, and then get up. Sometimes it makes a little bit more hectic. If it does come down to 178, 175, I think these are a great level to buy. You can see that I have these levels there, 178, 175. If this thing actually comes down some of these levels, I'm actually thinking about buying some calls there in that vicinity. So, but we may not get up there. So this is kind of, I don't know, it's like, it could or it may not, but maybe it's good to kind of observe it and see how it plays out. Let's go to AMD here. AMD had a phenomenal run here recently. You can see that straight downward. I mean, look at this thing. This was that prominent, conspicuous support, right? And everybody was looking at this level. Everybody was scared at this level. Everybody said, all these newbie, novice, barely, I read one technical analysis book, and I think I'm a master type of guy, and said this is a level that cannot be broken. All hell's going to break loose. You want to hold $10 area. This is a level to hold. This is a level that it must be held. This is a level you don't want. Bulls don't want to see this. How many times do you hear that? Like, bulls don't want to see this level breaking. Bulls don't want to see this level, you know what I mean, not holding. Well, that level broke, ladies and gentlemen, and that was the proverbial bottom, and that thing just went straight up. Don't you love that? Just people are, the market is fascinating. It's a fascinating place. I love this market because it knows how to fool the majority all the time. All the time. It is amazing how market can do this. And so, this was a support that everyone was looking at. They had their stop just below it, or they had a short trigger just below it. And look at this epic short squeeze. Just panic. You know what I mean? Just went straight up here. Looking at things more of a longer term here, you can see that this thing went up and looks like a giant flagging pattern potentially, and we're not breaking out, right? I think AMD is ready to thrive. That doesn't mean it's going to go straight up. It's going to have its ups and downs. It's going to have its consolidations. But in its due course, I do think that, you know, AMD can get into 30s, 40s, potentially. And obviously, we're going to take day by day, week by week. But I think for sure, like in a minor to intermediate term target should be about 20. And once this gap gets filled, probably going to act as resistance, just like when this gap was filled, we're pulling back here. This gap is going all the way back, coming all the way back from here, right? When this thing crashed back in 2007, right? These two gaps. So this gap was filled, and that's why it's coming down here. And it's going to gather momentum, gap back up here. So if we lose this prior resistance as a new support level, yeah, and it's pretty, you know, this is pretty conspicuous. It's like everybody's looking at that. So I'm not surprised to see this thing, because there's going to be some chasers. They missed out on this move, trying to chase it up here, and then they place their stop right below it, right? Which is the stupidest thing, because what's going to happen is, well, market knows that you put it there. It's going to take your stop and goes right back up. So if we do continue lower, then you want to see 14, 13 level to hold. And we'll see how it plays out. Let's go to Twitter. Twitter had a great move here. Let's actually go to weekly chart kind of look at a better idea here, you can see that, again, another conspicuous pivot, right? This is obviously the level 52s and 54. But this downtrend resistance, you can see act as resistance a little bit. Pull back for a couple weeks, but just got right back up. Look at that, the 20 MA on this weekly chart. The weekly 20 MA did act as support, and then it acted as support for weeks here. So that was a key point that we held that level. What does that mean? It means we're starting to establish primary term uptrend, and these moving averages starting to get respected. It means bears are tamed. You see what I mean? And bulls are finding more strength over the buyers, and bulls are starting to control this movement, right? And bulls are buying the dips. There are new buyers coming in to buy the dip. We are seeing, obviously, you can see that we're seeing public participation, right? What does a smart money do? Smart money, they buy it, anticipating the move. That's a smart money. And then we make these big moves. Those are institutions. And then the retail start coming and bring it up. But when the retail start coming in, well, things always get hectic a little bit. Actually, let me add Intel because I want to illustrate that later. But, you know, so then now we're starting to consolidate here. We had a phenomenal move. You can see just pretty much straight up move. And a lot of people thought that they'll chase it here. My next stop is going to be 52 and 55, looking at that pretty prominent resistance here. And then, you know, my recent article, I'm a long-term investor on Twitter since 20, part 4, I talked about how in that article that, you know, because so many people are watching this as my next target and start chasing this up here, these short-term traders, maybe it may not get there. Maybe we pull back and make things a little bit more hectic. But just from what it looks like though, just looking at last couple of days, it looks like we have this like a bull pennant type of pattern. Again, it may or may not. It's 50-50, but keep in mind a lot of shenanigans. It could gap up and tank, gap down, get up, or flush and then gap back. A lot of shenanigans that happen, especially after this kind of move here. So definitely this is not a level you want to start chasing. You can see where I buy. I never chase things. You can see that where I bought these blue arrows, which is all documented on my article. These are the levels of buy. See, I tend to buy these dips, but I never chase it as it starts to go up higher. You don't see I don't buy it up here or here. Once I start going, when the stock is going, I let it be. And I start to maybe take profit. I did buy some calls on this day, and then I recently closed it out at the top here, but I'm holding full shares on it. Let's go to Intel and I'll call it a day. That's kind of what I'm talking about here. You can see, even you can see on these, you can see where I buy, and then same thing happened on Intel. Just like AMD, same thing happened on Intel. You can see that right there. We talked about it last time. You know, I'll let you guys go with this. You can see that that was a level. That's a level it must hold. We must hold this level. Bulls don't want to see this level breaking. You know what? Bulls want to see this level breaking so the market can take your stuff, and then finally market can reverse. You see what I'm saying? And then that's what it did. It was the proverbial bottom, and then pretty much just went crazy after. You can see what happened, right? So the smart money already got into it, and then institutions start coming into buying it, and then the public participation. Look at how hectic it is. Just looks crazy. Just some big mess, right? Every time when the public starts to get in, it's a big mess. We talked about this. Finally, kind of broken below it here, and this is where you see that, well, that's a bearish signal. Well, it's not bearish signal as far as a long-term trend is concerned. You see a lot of times when people see something like this, they get scared. They think this is gonna come start crashing down. What happens is this is actually a consolidation rising wedge, which is a bearish pattern. That's what it says in a textbook. But when you look at this in an uptrend perspective, usually they come down and then they go right back up. But I've seen these break out to the upside, so they're usually 50-50. Any of these consolidations are usually 50-50. They're usually gonna break it to the downside or to the upside. But if it happens in an uptrend, it usually resolves to the upside. If it happens in a downtrend, it usually resolves to the downside. That's what you want to understand. What you really want to pay attention to is not these patterns and the candles. What you want to understand is overall picture. Are we in a primary term uptrend? You see what I mean? So for me, I think you know, I'm thinking about buying more. I'm holding everything, by the way, on Intel. Obviously, all my shares. I did close on my calls, some up here, but some of these levels, I think, is a good level. Like 50 or so, 49 is a good level to. I'm going to accumulate a little bit more shares. Remember, 100 SMA did act as good support here. You can see that 100 acted as support. So if this thing come down a little lower, I think this level to retest the 100, I think that's a good level to accumulate some more. Buy some more there. So that's kind of what I'll be looking at. That's it for me today. You guys have a wonderful weekend, and good luck trading next week.